Good morning, everybody, and this is your S&P 500 day trade setups for today. So this previous swing high here is what we're flirting with. We got a rejection, we got to close above it, and then we got to pull back to test it. And now we're sitting pretty much going nowhere right now. So the only thing I don't like about this chart is the oscillators. Oscillators are grouped to the upside, indicating overbought. So taking this break with a pinch of salt right now. This is an inside bar forming. Important to have the low of this bar in your sights, because any break below that is going to trigger a bigger move to the downside, and possibly, let's just get all the levels in, possibly something like that. We do have a crossover here, which is fairly interesting, and we are above the 155 at the moment. So there's a bit of noise coming out the markets today, specifically in the European markets. So I would be cautiously waiting for that. If you look at this on the 3 hour, big up, big down, big up, big down, big confusion, and then fizzling. So that actually works out into a diamond pattern. If you will look at that on the lower time frame, I'll show it to you. Oscillators easing off, separating, which is nice to see. We do have a potential uptrend for the week. We just haven't tested these moving averages just yet. So that's the first scenario. Second scenario is a head and shoulders break. So here's your shoulder, here's your head, here's your right shoulder. This is your neckline right here at 3,900. So lots of things going on here which are indicating a still potential upside. Right, so when we talk about butterfly, not butterfly, sorry, but diamond pattern, draw a level like that, draw a level like that, do the same on the bottom, and I think you can see the diamond now. So there is a diamond pattern. That is a typical consolidation pattern, and you can see price basically consolidated in a diamond pattern yesterday. So you had a pullback, you had a little bit of a pullback, which is basically, in my view anyway, a channel or a flag, and then you had the break, and then you had the retest. So I'm still of the opinion that what is going to play out here is this scenario. Let me just get rid of the noise. Delete that one and delete that one. So we've broken out, come up, we've consolidated, we've tested the break, and now we're just hovering here. Oscillators are starting to ease off again. A very rare situation where the oscillators cross over far apart like this and it doesn't play out. So they're coming back pretty much into no man's land at the moment, but I'm still of the opinion that is the setup that we should be looking for. And if we just look at that on the 8 hour, pretty much no man's land. There is a bit of structure here, but you'd probably be better off aiming for there, which is 4,074. So that's kind of the view that I've got at the moment. I think that's definitely going to be tested somewhere along the line. And if we just drop down to the 15-minute, nothing going on at the moment. We are sideways. So let's just delete everything here. Excuse me. This is the level I would be paying attention to right now. That's 39.60. I'd want to see a move above that and find support up there for a long. And I am watching 39.22 or 39.23 to the downside. Break that to the downside, then you're looking further down. And I don't think too far down, to be honest. I think probably in this area here. Okay, the diamond pattern pretty much is treated like a range. So the break of the diamond to the downside, you've got potential to move to down the height of the range. Same as to the top. But I'm not 100% sure. I think this is probably going to look to form a bigger range here with a bias to the upside based on the moving averages right now. So yeah, I think sit on hand until the song and dance of the banks have come out in Europe this morning, and then see if there's any opportunity there. Anything that impacts the dollar. So if there's a bit of dollar weakness that comes in as a result of that, will push this market higher. if there's something crazy that happens and dollar strength increases, which is kind of what the Europeans will want to happen, then expect a bit of a bigger swing to the downside. But then I think people find value and start buying into it. So basically, range-based trade. You're looking for a break of the range, retest, and then you're looking for the moves to the upside. So that's kind of the way I would do it. Wait for the break above this level, wait for support on here, and look for an inside bar, pin bar, engulfing bar at this level at 39.62, and then you're looking for a tight stop below that structure, and you're looking for a continuation higher. Anyway, hope that helps, and we will catch up with you tomorrow morning. Cheers for now.